Good morning, afternoon, and evening, friends. Happy and healthy New Year. Welcome to our very first of many webinars for 2020. My name is John Bay. I'm managing partner and co-founder of Fundstrat Global. Today, I'm very excited to say we're featuring one and only true wealth manager in digital asset space. WaveFinancial is an SEC-registered digital asset wealth management company with suite of investment strategies and funds for serious investors. They're focused on filling the gap of traditional wealth managers who have been slow to adapt cryptocurrencies and, frankly speaking, lack the expertise to execute it. All the folks and our friends at Wave combine deep traditional finance expertise with deep knowledge of digital assets, providing clients with differentiated options for exposure to cryptocurrencies. Currently, they have a little over 1 billion in assets under management, and we believe that will grow very quickly in coming months and years. Today, we're joined by Matteo Perruccio. Matteo is a good friend of the firm. He has spent 30 years in various strategic and leadership roles across asset management industry. Most recently, he was non-executive director and global head of strategic partners at Jupiter Asset Management, a $58 billion asset manager based in UK. Before that, he held roles as CEO of Pioneer Investment Management. Matteo also has extensive experience in family office space, having served as chairman of Seco Find Multifamily Office. The moderator for our webinar today will be our very own Farrell. As many of you know, he heads up our digital assets strategy. We will have as Q&A at the end of the session. You could use the button at the bottom of the screen to ask questions. We will have about 10 minutes for that. And also replay will be available for your colleagues and friends who couldn't quite make it today. As always, on behalf of my colleagues, I want to thank you for your support and joining us today. All the good stuff is not possible without your support. And without further ado, I will turn the mic over to my colleague, Sean. Thank you.
Happy New Year and welcome to the first crypto webinar of 2022. I think you'll enjoy this one. Obviously for the past couple of years, we have all seen crypto prices rise, very similar to previous cycles. But you hear a lot of talk about how we are in at least moving towards a post-cycle world within crypto. And a lot of that has to do with the attention from the mainstream. Mom and pops are starting to allocate to these emerging digital assets, and B, the capital that has come into to play within the crypto universe. Just last year, the latest numbers I have suggest that crypto-focused venture funds raised nearly 19 billion last year. And over 30 billion in capital was deployed into both crypto, protocols, companies, infrastructure, crypto adjacent projects, all within the crypto ecosystem. So this kind of speaks to the level of maturation which within the industry, and speaks to the fact that crypto assets as an asset class is here to stay. Obviously, a big part of those investments have been in the infrastructure surrounding crypto, as I mentioned. A lot of money has gone into building these investment management funds, a lot of on-off ramps, and to date they've been very successful. But by and large, we've seen a couple things. One, the majority of these funds have been access funds, that offer exposure to either a group of assets, or more often than not, just a single crypto asset. And the wealth management, investment management industry is somewhat fragmented because we've had these crypto native firms kind of superimpose their offerings on top of the existing banking infrastructure. So things are a bit fragmented, and there lacks a vertically integrated solution specifically for a lot of wealth managers. So in steps WaveFinancial, they are in fact a registered investment advisor. So whereas a lot of RIAs utilize, outsource their investment management and investment products within the crypto realm, they can actually serve clients directly. And they also are taking a more innovative approach to products. The cool thing about Bitcoin is, it is this incredible asset that you can achieve outsized returns by just having exposure over a long period of time. But there's also ways to generate income through derivative strategies. And there are more exotic ways to leverage these new asset classes to achieve different goals for different risk profiles. And I think Wave has done a good job in being a first mover to address some of this demand within the market. On that note, instead of taking up all of our airtime, I'll turn it over to Matteo to tell you more about what Wave offers and what they're working on. And I think you'll be excited to learn more about Wave.
Thanks, Sean, and Happy New Year first, everybody. And thank you for that introduction, and to for John and Sean, thank you, and to the colleagues over at FundStrat. I'm particularly excited about this opportunity in this forum, primarily because I don't want to use the word dinosaur, but I want to use the word a unique resource in this sector, in that I have a very deep and long experience together with some of my colleagues in traditional markets. And I'm really excited because I found it fascinating, your analysis and FundStrat's analysis on us through the prism of traditional asset management. And that's exciting. A little bit about the what I think makes Wave unique. Let me just get up the presentation if I can share that. Let me tell you a little bit, just a broad brush overview of the firm, but what makes, I think, which was alluded to in both John and Sean's introduction, about what makes Wave, in my mind, slightly different from many of the other major players in the market. One of the, I think, defining characteristics, if you look at the other major players, big players in crypto, is that, and who are crypto natives, was that most of them were formed and were born out of a very specific skill set, either venture capital and focused on venture capital and continue to focus on venture capital, and have since added on to their capabilities, or the others have been trading firms. So have tried to trade crypto either actively or algorithmically, systematic funds, and so on. I think what separates out Wave is that we were born out of the desire of some of the founders. Ben, who is on standby on this call, listening in, who's one of the co-founders, Ben Tsai and David Seymour, to try to resolve the challenge of how to allocate to this sector and have wealth management capability, risk-adjusted wealth management capability brought to bear on this crypto industry, which wasn't the general approach and has not been the general approach until very recently. So I think it's really important to understand that Wave was born out of the desire to be regulated, compliant, and to try to bridge the gap and unlock the potential of this digital asset ecosystem for investors across the world. We have this unique combination of trading, investment management, venture capital competency, which I think was alluded to. Where, as John mentioned, we're over $1 billion, and we're regulated US dollars, and we're regulated by the SEC, which again is a relative unique attribute of the firm. And the experience, everybody talks about experience in their company, but I think the combination of skill sets of the senior people and my colleagues at Wave is unique in this industry, and I'll just speak a little bit to that in a moment. But the way I think about when I think about Wave and explaining Wave is thinking about it in terms of three pillars. So we do have venture capital. Dave Seymour, one of the founders, has a steeped experience in the venture capital world, technology, which was a natural evolution for him to move in very early days into crypto and blockchain. And so we have a series of funds, which I'll get into in that space. We then have another area, which are what I would call our crypto funds. And they are more to what Sean was alluding to, which is trying to provide investors with the ability to invest in regulated structures that with ease of access, but which are applying active strategies most of the time and trying to exploit the unique characteristics of the digital asset ecosystem. And then thirdly, we have wealth and treasury management. And again, I'll go more into that in a second, but that is probably the most direct expression of the ethos of how the firm was founded, in terms of wanting to provide, as I said, risk managed exposure and diversified exposure to crypto assets, which is not something that is readily available and easily available and accessible in this industry today. So very quickly on the senior team, I mentioned David Seymour. He's got a very deep background, had his own firm, sold it, set up a venture capital tech business with more than 400 million in AUM. And he was an early adopter of crypto, saw early on the problem of going to the traditional investment banks and private banks and asking them to help him manage that crypto exposure. There was really no one willing or able to do that. And so we had to do, why don't we build a firm that is regulated, compliant, and structured and able to do that for investors. Ben Tsai, another co-founder who's on the call, was also head of Merrill Lynch and AllianceBernstein, both firms. He spent a long time in Asia and their derivatives and structured product, running their structured product business in Asia. He came back to LA and teamed up with David and Les, our third co-founder, who's chief strategy officer. And he comes from he's a technologist, came from the music and entrepreneur, and been very, very deep and early into this space and incredibly knowledgeable. And he's our resident expert also on the NFT and metaverse space. And then there's myself, and you heard my background. So when we put that together, we thought about how to address this marketplace. And we kind of thought about it in different ways and trying to leverage the different opportunities that the market provided. One was to provide access for investors. And so, we've kind of generally lumped these various activities into these categories for ease of understanding. But, to be able to acquire crypto, have safe custody, this is becoming doable at a pace that's remarkable. But we don't have to look that far back. Even 12 months ago, it was more difficult to find regulated custodians and regulated exchanges, and that's changing at a rapid pace. But it's still, I would say, not that simple for the average investor around the world to invest in crypto through their trusted institution. So we wanted to provide them with fund structures that they could invest in. And so Wave Select 5 is a top 5 tracker, and we'll talk a little bit about that, which rebalances on a monthly basis. Then we have the Wave Genesis Fund and a VC fund, our first fund. And we're also in the process of launching a BTC ETF, which is partnering with a local asset management firm. Then the next is lending platforms. Offer cash and token lending and borrowing. This is a fast growing area. Just today I was on a call with a family office that is very interested in this and creating yield from exposure to crypto. And again, we'll talk a bit about that. Derivatives, Sean alluded to this. We launched, and I believe we were the first to structure it in a fund structure, a product, the Wave Bitcoin Income and Growth Fund, which writes covered calls on Bitcoin with the objective of paying out a yield on a monthly basis, which we've been able to do for 2 years, generating 1.5% per month, and capturing a large part of the upside of Bitcoin over time. Then we have both staking and DeFi, so sort of 3.0, as we go up the scale of evolution in this industry. And we're in the process of launching a yield fund, and we'll talk more about that when we're ready to get that launched, and also staking fund. And lastly, we recently launched a NFT fund, which is a very hot sector. We are, I would humbly say, we're one of the most experienced in this space. We have an exceptional team led by one of the co-founders, Les Borsai, who has been playing in this space from the very beginning. And again, I'll talk a bit about that. And lastly, we launched an award-winning tokenized whiskey barrel, Kentucky whiskey barrel, American whiskey, and that's done exceptionally well. It's a closed-end fund. It's closed, and that's just an interesting example of real asset tokenization. So I'm not sure I need to address this, but in case there's individuals who are thinking about crypto from an institutional allocation perspective, and I'm sure many of you have seen studies similar to this one. The basic upshot is that by putting in a moderate allocation, anywhere between 1% and 5% to Bitcoin, using Bitcoin as a proxy for crypto, you demonstrably increase your Sortino ratio, and obviously you increase the volatility, but the total return can more than treble. So it's an interesting accelerator in a time when many institutional investors are struggling with the complex fixed income market, where we know the predominant real returns for fixed income are negative, and how do you build your portfolio around a portfolio without fixed income allocation? So this is an interesting, I think a lot of institutions will increasingly be looking at and are looking at Bitcoin and other crypto investments as a way to improve their returns. Sorry. So let's go just a little bit deeper into the fund that both Sean and I have alluded to, which is the Bitcoin Income and Growth Fund. This is one of my favorite funds. I think predominantly because of its simplicity, and I think it captures and it illustrates exceptionally well our thinking at Wave about trying to look at assets, digital assets, from a more traditional prism, and looking at the characteristics and trying to exploit those characteristics for outsized returns. So as we know, for a long time, investors have been looking at Bitcoin and crypto in general from purely a capital appreciation perspective. Buy crypto, hold it, and it will go up a lot. I think we took Ben, who took a long look at this asset and saw some characteristics that made him realize and made us realize that this was the perfect growth asset, right? It had very strong growth attributes, but when combined with an option strategy, a covered call option strategy, could also throw off yield and a dividend. So for a growth and income product, thinking about using the asset as opposed to thinking about investing purely in Bitcoin. So this is not meant for the investor who believes Bitcoin's going to go up, 500%, is ready to take the ride and doesn't care about income. That's one way, and this fund is not for that investor. What this fund is for the investor who says, I want some exposure to the upside capital growth of Bitcoin. But I really like the idea of smoothing some of that volatility by having more or less, a 20% annualized dividend paid out, if you choose to pay it out, in fiat. And we've been able to do that. It's a reasonably priced product, of 1% management fee, and we take 5% of the premium, which again is reasonable. We've been able to pay out a minimum on a monthly basis over 2 years of 1.5% every month. to the investor. Let me go to the next one. Oh, sorry. Then we have the Select 5, which I spoke about. Select 5 is an index fund. It's top 5 token fund, excluding stable coins and excluding Dogecoin and Ripple for various reasons. And what we do is we rebalance on a monthly basis, and we employ for a small portion of the fund, we employ some lending strategies and yield strategies in order to recoup some of the costs, in order to track as closely as we possibly can the index. And in fact, this year we were able to outperform slightly the index. And the fund charges there are 1%. And this is for those, like, if any of you on this webinar are like me, you know, when I first got into this space, I struggled with how do I participate in this attractive beta without a very expensive tracker product. And then the challenge is I like the idea of being in a fund personally. It's an open-ended fund, you can come in and out. And some of the products out there, as you know, that are on exchanges are trusts and therefore have traded a premium or a discount. And we're seeing, hopefully we'll see other passive products, but this is something that we felt was important. And it was driven by a family office that had a desire to have exposure to the top 5 tokens. Then we move on to our first fund, which was Wave Genesis Venture Fund. This is a hybrid crypto hedge fund, and basically it's a VC fund which invests in blockchain and crypto companies, holding dry powder in crypto, and taking both equity and equity for token positions in the underlying companies. This fund has done quite well. Through October, it's done 200%. I think we're probably going to be nearer to 300% returns by when we get the final NAV for 2021, which is an exceptional return. And this is for the investor, I think, who wants to participate in the Web3 evolution and be on the cutting edge of technology. And also participate in the attributes, the growth attributes of tokenization as it continues to develop. Another fund we have, which is sort of an interesting one, which was Cardano Group, felt that they wanted to seed Wave and do a fund in collaboration with us, given our pedigree and experience and track record in venture capital, to help grow the ecosystem, the Cardano ecosystem. So this fund's objective is to make money. Let's make that very clear. The fund is first and foremost trying to identify companies that will be successful and early stage, and hoping to identify companies which will want to build on the Cardano infrastructure and network, and benefit from the technologists within the Cardano group, and also from our experience in helping to grow early stage blockchain companies. And that fund also is a 2 and 20 fund, as is, sorry, I should have said also the Wave Genesis fund is a 2 and 20. Another fund that we just launched, you heard me refer to it, is our NFT fund. This non-fungible fund invests 70% in collectibles and 30% in the infrastructure metaverse and in the infrastructure and development around the metaverse. The edge here, the differentiator, however you want to define it, is that we have a very deep knowledge base and a team that has been in this sector and in these groups since the very beginning, which is I wouldn't even say an advantage. I'd say it's necessary if you want to play successfully in this space. And we employ all kinds of strategies, but I think what's also slightly unique is that we're applying a highly analytical approach to it, trying to identify the attributes of the various NFTs to identify winners early on. And so far we've had, it's early days, but we've had exceptional results from the fund to date. The other pillar I talked about was the treasury and wealth management side of the business. This is a business where we offer managed accounts for institutions, for protocols, for corporates, and for high net worths who want to either diversify, get access to, create yield, liquidate, all the different strategies that they might want to. But I think the key here is, it goes back to my early comments about the ethos of WaveFinancial, which is risk management and asset allocation in this space, which are, I'm sad to say, are terms that I don't hear enough in the digital asset space. And I think what we're focusing on is how to create a risk profile, a risk objective for the investor, and then to achieve it in a regulated, compliant, and transparent way. And we act as a fiduciary. We don't trade against our client. And what we try to do is make sure that they're working. We manage counterparty risk. We manage also investment risk. And as I said, the various strategies involve derivatives, which we've been doing for a very long time, lending, staking services, and of course, trading strategies. Just coming to the end, and then we can talk a little bit about and answer questions and talk a bit more about the fund, to get deeper into the funds if anyone wants to. I just wanted to show we have a team of 30 people, over 30 people now, and growing rapidly. And I would agree with Sean and John that given the last two quarters of growth, we will be growing, I think, past 2 billion in the next year, I hope. I would like to just make one or two observations about how I look at this market. And it's very hard on these webinars because the audience will have I'm sure, a very broad range of experience and knowledge in this sector. There are some newly initiated crypto curious investors, some that haven't done any crypto investing, and those that are extremely knowledgeable about the space. So please take my comments with a grain of salt. But I do think one of the disservices that we do in this industry is refer to the grouping of assets as cryptocurrencies. I much prefer the nomenclature digital assets. And I come from a long experience in hedge funds. And one of the reasons I got into this space was because I saw a lot of analogies to the early days of the hedge fund industry, and the language that was being used about the managers and the strategies. And one of the things that annoyed me a lot was when people would say to me, I don't trust or I don't like hedge funds. I said, well, can we peel that onion a little bit and understand better what you don't like? Do you not like long short equity? Do you not like systematic funds? Very different things. And I feel the same way about crypto. People, I have a lot of conversation with people, and they have, everybody has views on the industry. I think we can all agree that this industry is here. It's growing rapidly. I'm sure some of you saw the announcement of Paradigm and Sequoia investing in Citadel Securities. These are things that we're going to see happen more and more as this industry matures. And I think it's exciting because I'm really looking forward to the institutional investor foot to drop, so to speak, and to see institutional investors start to think about this as the next growth area of asset class. And I would just leave everybody with the thinking, when I think back about how people thought about emerging markets 15 years ago and how to allocate to emerging markets. And I remember 15, 20 years ago, people would be hard pressed to put 3% of their portfolio in emerging markets. And now it's a core allocation in any investor's portfolio, any institutional investor's portfolio. So I expect the same to happen. And we're only at 2 trillion right now out of a almost $30 trillion investment market. So we have a lot of space to grow. So with that, I will turn it over to Sean for questions.
Thanks, Matteo. That was phenomenal. We have a lot of good questions from the audience. I think a good place to start, probably, I really like your comment on cryptocurrencies. I think a lot of people, perhaps the ones that follow the industry from a high level still kind of think of the industry as just, a lot of copy paste of Bitcoin, forks of Bitcoin, Ethereum, et cetera. But we are truly in at a point where there are subsectors within crypto that are forming. The last year, we've seen periods in which, there have been periodic rotations out of Bitcoin, Ethereum into other smart contract platforms. And there have been times where metaverse tokens have outperformed, times when DeFi has outperformed. And so there's actually a lot of this crypto native capital that has no interest in leaving the crypto ecosystem, because there are just so many very legitimate and differentiated projects and asset types within crypto, wider crypto industry. So I'm glad you brought that up. So maybe we start on the innovation end of things. You brought up the NFT Fund, which I think a lot of people are pretty interested to hear more about. We have a question pertaining to investment criteria. I'm wondering if you could speak more to the analytical end of the vetting investments for NFTs.
So the NFT fund, that's comprised of about 70% of collectibles, 30% infrastructure plays. As you can imagine, there's quite a bit of collectibles, and I think the average NFT flipper per se, buys in usually around a 2 ETH floor. So you can see the momentum of some of these collections as they start out from a very small floor price and move their way up to 2 ETH and 10 ETH, and now we're seeing Bored Apes near 70 ETH. And I think what our job is there on the infrastructure side is kind of build out, ways for creators and users to buy into NFTs, NFTs and create projects to help that burgeoning ecosystem. So it's a really neat fund where we can invest, in the artists and creators of these NFTs, and also make their lives easier through different infrastructure plays. And that goes for all of our funds. I think we have a focus on, it's kind of our jobs as venture capitalists to build out this, this early crypto ecosystem for various layer ones.
Thanks for that, Tyler. Yeah, to your point, it's been interesting to watch the past month or so. We've had a bit of a macro-driven sell-off, but interestingly, a lot of the blue chip NFT assets, you think of the Bored Apes, CryptoPunks, et cetera, they've actually performed fairly well. They've seen a lot of demand, and it's very similar to someone, storing their cash in a Van Gogh, right? Except it's a digitally native Van Gogh. So that's interesting to watch, and something I thought was really pertinent that you guys put in that deck were the attribute, the different attributes that you look at within NFTs. So a lot of people might not understand that if you have these, what they're called profile picture NFTs, a group of Bored Apes, they're very popular. I don't know what their floor is right now, but it's pretty high. Mm-hmm. And the different NFTs within that subcategory of profile picture NFTs, they all have different attributes: hats, noses, eyes, etc. And some attributes are more rare than others. And it seems to me like this is something that you guys are looking at, analyzing, and trying to figure out what is the best value play in terms of attributes of these NFTs.
Sure. Yeah, that's a great way to put it. And we have, Matteo mentioned Les Borsai, who leads that fund, and he has built out a team of NFT experts that do exactly what you said. You go into Bored Ape Yacht Club, for instance, you can see the floor is very high, near 70 plus ETH. But if you actually dig into the attributes, and you can see if someone listed perhaps a Bored Ape with a hat or, with a chain, that's very, if there's 10 of them and all 10 are at 100 ETH, or all 9 of them are 100 ETH floor and one's at a 70 ETH floor, you can see there's a value opportunity there. And I think that's a lot of flippers are doing today. And I mean, this is just the extreme example because Bored Apes are just quite high. But, the NFF fund at Wave also swept the floor on Cool Cats, and that floor price has been increasing ever since, actually. And so I think the NFT fund, those experts find the best projects with the most utility and momentum, then invest accordingly. And also a lot of these NFTs are part of gaming ecosystems. So yes, Bitcoin's down, over 40% from all-time highs, but you see NFTs still, performing very strongly. And that just goes through utility and community. It's, stronger than ever. And we predict that's going to keep continuing.
I think I'd like to add something to that at the risk of saying something obvious, but for many of those like myself who were not very well introduced into the NFT until more recently, I think the problem with this is somewhat analogous to what we talked about with cryptocurrencies, using the word cryptocurrency, because when we say NFTs, there's been a lot of noise around one very specific segment of it, which is the art and the sort of sports angle and music. But the gaming part alone is, I mean, I saw remarkable statistics about the revenues already being generated out of e-gaming, and just that growth trajectory of the gaming and the ownership rights around everything to do with the gaming sector is a big enough proposition to justify growth in this sector, leaving aside all the other major components that we're seeing, grow at a rapid pace. So I just want to caution that often people, gravitate to something that's easy to understand, like this picture, and why does it have value? Why does it not? But there is a lot more to it, with the whole metaverse development that's happening on the other side.
Yeah, Matteo, you bring up a great point, and I think traditional gamers is probably, ballpark 3 billion gamers, and there's about 10 to 15, ballpark blockchain gamers. So we're very early, and we're a part. Wave is part of that journey from the venture capital perspective to build out that ecosystem. And over the next 10 years, it's going to be pretty fascinating.
Yeah, and I'm glad you guys emphasize that point in terms of NFTs, because when you break down the actual acronym, it's just any token that is non-fungible, right? So basically any tokenized piece of data that is stored on the blockchain could range from digital real estate to, like you said, artwork or in-game asset. So I'm glad you guys brought that up. And on that note, we do have a question. Are you guys looking at either digital land or identity focused NFTs at all?
Land, yes. Our NFT experts at Wave look at Sandbox, Decentraland. There's a lot of up and coming metaverse protocols that are selling their own land, and whenever even at WaveGen, our generalist fund or C fund or Cardano fund, if there's a metaverse play or a gaming play and they're selling land, we're able to buy that and support our portfolio companies in that way. But yeah, land has made quite the splash in headlines and going for multi-million dollars, and the floor price on some of these Decentraland and Sandbox land items are 3-4 ETH. So yeah, that's a big focus as more people come into these metaverses. Whoever owns this land it's pretty valuable, and you can also develop that as well.
Yeah, just from a nomenclature perspective, ETH floor, when we use that terminology, it just speaks to the lowest list price within a given class of NFT.
Yeah, and you mentioned a great point, identity, and that's what NFTs are for a lot of people. It's just because if you have a Bored Ape or a Doodle, another great project on Ethereum, if you have that as your Twitter profile picture, it just says a lot about you without knowing who you are and like what you look for in a project and what community. There's a lot of great stories that people are wearing merchandise from Bored Ape Yacht Club and see each other at airports, and they give each other a hug just because they're part of this really tight-knit community. And that's what kind of NFTs and crypto is all about, especially in the early stages.
Absolutely. All about networks, right?
Yep.
Great. That was awesome. I guess let's move on down, I guess we'll call it the risk curve, and discuss the venture fund. A couple of questions pertaining to the investment methodology there. I guess, can you speak to a high level methodology in terms of what you look for, what stage you try to get in at, and are there specific sectors within crypto that you target, be it DeFi, infrastructure, Web3,
Sure.
et cetera?
Yeah, I'll start. And David Roebuck, who's our principal who leads our day-to-day, is also on. He can chime in after. But yeah, we have 3 funds. So we talked about the NFT fund, and I am specifically part of the Wave Genesis, our generalist fund, and our Cardano ecosystem fund. And within those, very generalist. So we have, on our generalist fund, we have, a lot of DeFi protocols that we invest into, layer ones, metaverse plays, privacy. Really, you could think of, we take a look at the overall crypto ecosystem and what does it need and what is a pain point and how can we better that. And I think a big trend is making DeFi more friendly for people who aren't crypto native, and making it secure. And a lot of games are actually hard to play. And a lot of people don't know how to set. They don't let you play until there's a wallet integration. So making the wallet integration process, actual game as well. So I think protocols are getting smarter and smarter, and as they do, we're there to support them. And it's kind of like going from DeFi 1.0, liquidity mining and token transfers and so forth, and going to DeFi 2.0, where it's more about capital efficiency and yield optimizers and so forth. So we have a generalist approach, and we look at anything and everything, and diligence those accordingly, and then invest.
Great. That's awesome. That's great, and that's good to. I think right now you miss out if you don't cover the broad, the broad crypto ecosystem, right? I mean, there's just while there is like a lot to keep up with, I think if you're an early stage fund, you'll miss out on emerging trends if you have too narrow of a focus. So
Yeah,
that's great. Matteo, I don't know if you have anything to add to that, but otherwise we can move on to the next question.
Yeah.
All right. Great. So we have a few questions pertaining to, I guess we'll call it the specifications and of the funds. So can you speak to the fee structures for the different funds, and maybe perhaps who is qualified to invest? A lot of questions about minimum investments.
Sure. And I'm going to depend. I want to make sure if I misspeak, Ben, or Heidi, please jump in. But I'm pretty sure I got it right. So let's start with the Bitcoin Income and Growth Fund. Bitcoin Income and Growth Fund has a 1% management fee. The minimum is $100,000 to invest, and it has monthly subscriptions and monthly redemptions. The Select 5 is 1% management fee, and it has bi-monthly subscriptions and monthly redemptions. The Wave Genesis Fund, the VC fund, has a 3-year initial lockup and 1-year annual redemption, and that's 2 and 20, so 2% management fee and 20% performance fee, and that's $100,000 minimum. Everything we're talking about is in US dollars. The C fund, the same, 2% management fee, 20% performance fee, and 3-year lockup and 1-year annual redemption. And the NFT fund, the same. It's a closed-end fund, and it's got 2% management fee and 20% performance fee. And all of those, with the exception of WaveGen, are BVI funds. WaveGen is a Cayman fund. So the Wave Genesis VC fund is domiciled in Cayman, and all the rest are in BVI. And they also have feeders, US vehicles.
And I apologize if I missed this, but do you accept Do you accept funds from IRA qualified accounts?
We're currently not set up specifically to accept IRA, money, but our system's also not rejecting any of that. So I think it really depends on the IRA kind of provider and whether we can connect with them. So happy to have that discussion offline. It's more of a logistics issue rather than a qualification issue. So all of our funds are available for accredited investors, and for the ones that have a performance fee component, they'd be for qualified clients. So.
Awesome. And then just jumping ahead to we were going to mention this at the end, but I'll just throw it in now. If you are interested in discussing Wave further with Wave management, or want to get in touch, just reach out and we will facilitate that communication. So just for anybody that is chomping at the bit to invest with Wave. One interesting question here that I think is a savvy question and someone that knows what they're talking about. Can you speak to some of your custodians and some of your vendors? I'm assuming that most of these funds are not self-custodied.
With regards to a lot of the products, I focus on the product development side, and I look after also the trading team. So, I'll comment on kind of the systems and setups and so forth. We have a 24/7 trading desk. We access domestic and international exchanges through kind of the different entities that we own. All of our entities have their own accounts, are all segregated, from each other. So it's a very clean setup. We use qualified custodians and registered custodians globally. In the US, our biggest relationships are with Coinbase, with Fidelity. Internationally, we use Copper. We have an account over at, so Copper is a UK based. We have an account with Hex Trust, which is in Hong Kong. We have a relationship with Hex Trust out of Hong Kong, and relationship with Propine out of Singapore, and so forth. And all of these entities typically are locally licensed to be in the digital custodian business. So hopefully that helps.
Yeah, that's great. That's great. And it's a very important, I alluded to this earlier, but there have been so much capital allocated to building out the infrastructure surrounding investment funds, surrounding the actual assets. I think people sometimes discount the infrastructure that's already been built and how safe your funds actually are, how safe your assets are, given what has been created already. So it sounds like you guys are doing that right.
Yeah, as an SEC regulated registered investment advisor, we spend a lot of time with lawyers and with structuring to make sure that our structures are compliant and are kind of done in the right way. And that includes kind of all the service providers and even fund administrators. We have audits annually. So we're really running this business as I would call it a traditional financial business. So we really see crypto as the next asset class that gets added into the mainstream of finance, and we're supporting it as such.
I would also add to that that's also the case in, for example, the wealth management side, where we, one actual situation that I remember was a international client that had a large amount of crypto, and was earning, just for argument's sake, let's say an average yield of 6%. When he ended up working with us, we were able to. He was only looking at really, the return he was getting. We were able to increase his return, but also demonstrably reduce the counterparty risk that he was running, and that he wasn't even really truly aware about. And I think that's something that isn't talked about enough, which is, yes, we all want to make money, but we also want to safeguard our assets and do it the right way. And that's not always self-evident in this industry, in the digital asset space.
Yeah, and look, counterparty risk is still a thing. I think we've seen some less than stellar actors in the space, even this year, that have perhaps either collateralized assets with a less than robust third party, and clients have people that actual investors have paid the price because of that. So it's a very important aspect of this whole system. Great. Ben, so since we have you on the line, Can you maybe speak to the covered call strategy a bit? There's some curiosity around how that's facilitated and where perhaps some of the risk is located in that strategy. I think that's been a pretty lucrative strategy that a lot of hedge funds have employed this year, given the structure of Bitcoin's in the derivatives market. So maybe you can speak to that a little bit.
Sure. Yeah. I mean, the idea behind that is that Bitcoin has very high volatility. Rather than be frustrated by that, let's take advantage of that volatility by converting that into yield. And we launched this in November of 2019 with a target return of 1.5% per month as a payout. So when clients invest with us, we usually take US dollars and then we buy Bitcoin on the client's behalf. And then we write cover call on that pool of Bitcoin that we hold, for them. The call options generate that income stream. We pay that out monthly. In the first year, we were running it relatively conservatively. We paid 1.5% per month. And then we realized that we could probably have a bit more flexibility. And so we started paying a little bit more than that as volatility picked up. So the yield has been at least 1.5, if not more, every single month for the past 26 months. So that's been pretty good. Separate from that, we're able to set the strike, which is really the monthly cap on the increase in Bitcoin. We're able to set that 20 to 50% away from spot. Now, the more volatile it is, the further away we can set it. And that gives an upside headroom for Bitcoin to appreciate where that's captured on behalf of the investor. So we're able to capture a good portion of the upside of Bitcoin. So, and sometimes, all of it, if not even more. So, in 2019 full year, we were up 190%. And in 2020, we're up over 90%. We're still waiting for December numbers. So I'll just kind of say a rough one. We're over 90% on that. So, that is, a very good return. And for 2019, we underperformed Bitcoin, but for 2020, we actually outperformed Bitcoin because if you include the dividend payout portion of it, it's actually a better return and slightly lower volatility because we're reducing the volatility with this structure. So from our perspective, it's a good way to invest in this product. And taking a step back, the point of this product, like Matteo mentioned, isn't to capture the maximum amount of upside. If you want a maximum amount of upside, you mortgage your house, you buy futures, you take as much leverage as you can. But it's not designed for that. It's designed really for wealth management investors who are looking for a constant stream of yield with some exposure to the upside of Bitcoin. And in certain markets, we outperform Bitcoin, and like last year. Whereas, in 2019, when Bitcoin goes ballistic, we capture a good portion of that, but not all of it.
Thanks, Ben. Yeah, and it's a strategy. Like I said, it's employed by a lot of hedge funds, a lot of large institutional funds. And it's a unique way to leverage the volatility of Bitcoin to get these sizable yield. And now it's accessible through your fund, which I think is a phenomenal offering that you guys have.
I'll also mention one other thing. I think you mentioned the risk, and sorry I didn't address it in the first part. We take risk very carefully, very seriously. When we first set it up, we traded like every other institutional clients. We go on exchange, we deliver collateral, and we do our trades, and we leave the collateral on the exchange because we have an outstanding option position basically at all times. After a while, we've realized we're able to reduce that risk. So we've changed our setup. So now that we do not deliver our collateral to the exchange for exposure. So what it means that we're not really taking the exchange's credit risk. And that is an improvement in the structure that we're able to do as an institutional investor. And something like this would be difficult for an individual to set up with their, $50,000, $100,000, $500,000 investment. It's really because that we put it all together in a fund that we're able to take advantage of some of these channels and setups.
That's really great, and I'm glad you remind me of that point because I think that's key differentiator here. So that is good to know. It does look like I've been given the red light. It looks like we are running out of time. So I can let Matteo or Ben give their final thoughts if you want, but I just appreciate you guys taking the time today and joining our clients and educating them on what you have to offer. I think it's pretty exciting, and you guys are going about this the right way. So thanks for coming on.
I would just like to thank everyone for listening. We're really trying to do things the right way. And there was one question that I want to answer real quickly, which was what inning we are in the crypto markets. My personal opinion is we're in probably the end of the first inning. We've got a lot to go, but it's a very fast-paced game. And I think it's everyone needs to think about how they participate in this in the way that they feel comfortable with. So thank you to Fundstrat and to everybody who participated, and Ben and my team at Wave for jumping in. Thank you.